Hey all,
Yes.
welcome to Share Trek. This is Raj here. Welcome to the weekly spotlight and welcome to Sandeep to join us today. And the weekly spotlight today is going to be on Lululemon. And Sandeep has got a lot of things to talk about it. So Sandeep, you can take over on the other side of our disclaimer. Welcome back, friends. Sandeep, over to you.
Great. Thank you for that introduction, Raj. It feels great to be back. It feels great to get over here and talk about some stock which I'm sure a lot of us are familiar with. Maybe a lot of us have this company in our closets and our wardrobes. That is Lululemon. So the interesting thing about Lululemon, and I feel a little bit of pride about this because I am a born and raised Canadian. Lululemon is a Canadian company from Vancouver, British Columbia. However, it is the only Canadian stock I could think of, correct me if I'm wrong, which is not listed on a Canadian exchange, just on the American exchanges, the NYSE, the Nasdaq. That's interesting. And what is cool about this, there's a lot of cool things about this company. But what is interesting about this company is it just reported earnings this past week. So this is very fresh information, very neat, very fresh. Let's jump right into Lulu. So Lululemon, I'm going to first get into what the company's been doing. For 2022, it experienced a real heck of a bear market where the company fell just astronomical percentages. It just was not a favor of Wall Street at all. It just plummeted almost straight down for the entire year. A lot of that is, I believe, because of recession fears. So we're going to find out if those recession fears still hold up today. But on the year, on 2023 alone, since January, stock is up 53% on the year. Now that is mighty impressive by any company standards. It's not NVIDIA where it's up like 250% in the year, but for a retailer, I'd be really happy with those gains. Another thing which came in just the past week is the company is going up because of a massive stock repurchase plan of $1 billion. And it announced a partnership with Peloton, which is, I got my opinions about that. But just starting off looking at its earnings, net revenue expected 3.14 pie number, estimate was 3.18. So it's a very slight miss, nothing too big. EPS expected 2.29, actual 2.53. A nice beat on EPS. Guidance, the expected was 3.1, and the expected was 3.15, and they got 3.1, which is, it's a little weaker than expected, but nothing too bad. And they did miss on the revenue guidance as well by a little bit, but it was very small, and I'm not too worried. However, if we want to know if this company has a bunch of risk, balance sheet risk, which is something in the last company we reviewed, Trade Desk, we found out there is very little balance sheet risk. Does this echo with Lululemon? What I like to do is, what I have done, I have always start with the cash flows. So, first of all, looking at the cash flows, okay, first of all, looking at the cash flows, what was really interesting is this is 3 quarters ending on October 29th, 2023. So hats off to Lululemon. They reported this. They got this done really, really quickly. What is that, like 5 weeks? And they churned this out. So credit to the accountants out there. You guys don't get as much credit as you probably do. So accountants, good job. So net cash from operating activities, you got $912 million, which is great. But another thing that I found really, really interesting is their inventories are negative. From the cash flow point of view, when you see negative, that means they are buying inventory. that kind of tells me that they're expecting to probably sell much more inventory, which is nice. It sees that they probably will think of some growth. So if we take that $9.2 million of operating expenses and take out this property, plant, and equipment, you get about a free cash flow. That is cash flow that has not been dedicated to anything else of about $467 million. That is pretty good. That's quite a bit of money. That's a lot more than a lot of the companies who have negative free cash flow can tout. Looking over to their income statement. So one nice thing is that their net revenue of $2.2 billion in just this quarter. Wow. Quarter over quarter, that's about a 21% increase in pardon me, quarter to quarter, if we look at gross profit, it's about 21% increase. However, their SG&A, sales general administrative, did increase by 23%. That's a little higher, but the company is still very profitable. And what I went ahead is I took a look at some of the cost of goods sold and the net revenue, and I calculated about a 57% gross margin. That means before counting all of their take-home dollars and their taxes and other stuff, they're making about 57 cents out of every dollar in gross revenue, which is mighty impressive, especially for a retail company. So gross profits rising, free cash flow is really good, and the margin is increasing, margin up. Small miss on guide, but it's still very good. How can we take a look at their how can we acquaint this to their assets? So when I look at their balance sheet, I see that cash and cash equivalents with some of their receivables, they have about a $1.12 billion in $1.2 billion in current assets. However, if we look at their current liabilities, about 1.45 billion in current liabilities. Now that can be kind of turning off to a lot of people. However, one thing I did notice here is unredeemed gift card liability. So these are revenue given out to gift cards that have not been redeemed yet. For accounting, you have to classify this as a liability. Though I did find an article that read that about 10% of all gift cards go unredeemed. So that kind of tells me that gift card industry is a very lucrative industry where it's almost like guaranteed money, where 90% you're going to get as revenue. People are going to buy stuff from your store. 10%, it's almost like free money. So that's really, really nice. I went ahead and just kind of not disregarded that, but took this into account, and I considered how much revenue they're going to have from each quarter. They have enough cash to cover all of their short-term revenues, which is really, really sweet, really, really nice. So going back to some of their net income, comparing their total sales of their domestic, which I got from the earnings, domestic is up 14%. The expected domestic sale increase was 13%. So very nice, going up. But so one thing that I would like to dwell a little further on, first of all, the balance sheet risk, very low. Low balance sheet risk. Company has lots of money coming in, margin going up, revenue going up, but costs in control. Very nice. What's going on with the rest of the company? And that we took a look at their earnings call and their earnings statement, which funny thing, when I was taking a look at it, it was going on that very moment. So I kind of got a little bit of it live, which is interesting. The first thing that really stood out to me, and pardon me, I'm kind of an outsider. I do have some Lululemon products, but I don't know the lingo and terminology. So I was really thrown off. I had to open up a Google tab and find out what some of this terminology mean, where they were using terms for investors' presentations. They were calling them events. And I was wondering, am I looking at the right place? Is this an event? So that was a little bit of a funny moment over there. And another thing, they refer to other things as just things that I am not used to. Events. Another thing that there's another term. It'll come back to me. Just Lulu terminology is different from regular stock market terminology. So Lulu investors, you know much more than I. Referring specifically to the earnings call, however, I found that this company has a little bit of a different kind of consumer. The consumer that consumes the Lululemon products are more so, according to Lulu, of the upper to middle class active fitness enthusiast cohort. And a lot of them range from the age group of 15 to 35. So that is the type of audience we're thinking of when we're thinking of Lulu products. That's the type of audience we're thinking of when we're considering growth. And this age range, which I've done quite a bit of geopolitical research in the past, is this age range is much smaller than some of the prior age ranges. So that's something to consider in the future, of course. That's just my personal analysis, not Lulu company. The thing I found out is the company had this app called Lulu Mirror, or later referred to Lulu Studio. They're abandoning that app. Instead, they're partnering up with a company called Peloton. So Peloton is a very interesting company which makes treadmills and other exercise equipment. I'm going to talk about, I have my opinion about them I'll have my opinion on them and I'll talk about them. But company, 686 stores. 2 stores opened up just in this past quarter. 2 of those, 2 more are joint ventures in Australia. 686 stores. And of those, 655 are Lulu owned stores. The rest are partnerships and so on. Some countries have specific rules, as in you can't just go in, you must partner up with a company. I believe India is one of those companies. Raj can have his opinion about that later. Another thing is stock repurchase plan. At an average price of $380 per share, they bought $210 million of stock. And the stock went up just on Friday because they bought an additional $1 billion. That's $1.2 billion of stock. So what happens in a stock repurchase is, suppose there's 100 shares of stock. The company comes in and snaps up 10 of those shares. All of a sudden, there's 90 shares of stock. So it lowers the pool, which increases the EPS because there are fewer shares, and increases the PE. It makes the PE lower, making a much better buy. It's almost like a dividend. However, you don't have to pay tax on it. So it's something Wall Street really likes, and us as investors, we benefit from. Another thing I noticed is that the company says they plan, plans for 25. Oh, this was the one. 25 programmed locations were planned. Instead, they got 30 programmed locations. Me thinking, hey, they're opening up 25 new stores. This was more Lulu terminology. It's not what it was. They're making some kind of bigger version of stores. I kind of thought of it as a Walmart superstore sort of thing. So, hey, if I'm incorrect, my apologies. I am not the Lulu diehard. And they said these are opening up in locations with very high traffic and will prove very, very profitable. It, to me, shows that their company is actively expanding. Very nice. And their expected inventory is expected to be flat to slightly down, which is good. That means they expect to sell more inventory, and there's going to be much less. Oh, on the topic of discounting, that's my next point. They expect markdowns to be in line with 2019. And I went in and saw Lulu had a very nice year in 2019, pre-pandemic. They expect not to be very much discounting. That was, and what I looked at in 2022, one of the reasons the company fell was they had to do a lot of discounting. So they don't see that anymore. On the topic of consumer behavior and the consumer, the person speaking, I believe it was a CEO, said growth in spend from new and existing customers increase growth and spend from new and existing customers. So everyone is going back to spending like crazy, spending like stupid now. That's what I hear over here. So the folks over there thinking about recession, Lulu is saying, hey, consumers buying. Consumer, we don't need to discount. Consumers buying our stuff. And then they were talking about Peloton. And I have my opinion on this. I a while ago traded Peloton, made a profitable position on a short position on Peloton because I read that the company all of a sudden once, and this is in the prior year, was losing money on each treadmill they sell. And I am unsure about this partnership. However, this is my own personal biases. Time will tell how this Peloton partnership ends up. So maybe this is a little bit of homework out there to the folks watching this video. Because every time I walk by a Peloton store, I see no one inside the Peloton store. So, hey, but if rates change, maybe more people will be buying an $8,000 treadmill and they'll be financing $8,000 treadmills. So, are people buying Pelotons? Maybe viewers in the comments will have their opinions. They see no real discounting needed, showing that they have pricing power, which is power to push products at the price they want rather than discounted to the price that the consumers want. It kind of means that it's a seller's market, the Lululemon selling product market. I even took a look at their website, which kind of cool. Interesting to navigate through because it's not the type of website I'm used to, where I didn't see very much discounting. So they are holding true to this. Very interesting website, very interesting company, very cash rich company, very revenue rich company, very margin rich company, very optimistic company. They think the consumer is strong, consumer is buying Lulu, and they're partnering up with Peloton rather than their Lulu Studio app. So one thing I'm going to look at over here is what I went ahead is, oh, pardon me. By the way, I updated these numbers just today to the new stock price. What I went ahead is took a look at Lulu's current stock price, which is close to about 490, and their end of the year EPS. Their current EPS is about 7.7. However, this is expected based off their guidance, which came in a little weaker than we thought. Part of that was because of a consumer that they're expecting to spend less than what they anticipated, but they're still expected to be strong. EPS end of the year about 12.16 per share, and that is factoring in, I believe this is factoring in the decrease in shares. If it isn't, pardon me. Price to earnings ratio, which is still a little rich, about 40. However, expected EPS growth, which I calculated on the income statement and the balance sheets, of about 18.75. Their PEG ratio is about 2.15. Now, Wall Street's estimate was actually closer to 19 point. Pardon me, was actually closer to 19.8 or 19.7, but this was rounding up to 20. So pardon me for that. Their new price to earnings growth ratio, if we're going by Wall Street's estimates rather than my more conservative estimate, is 2.06. That's actually not too bad. That's over there in the lines of NVIDIA and AMD. It's close to what Airbnb is trading for. So very nice. Trading a lot cheaper than big tech. So company thinks consumer strong. It thinks it's strong. It thinks it could sell more inventory, but weaker than expected guidance. So my opinion, if we dodge the recession, Lulu looks pretty delicious. But if the recession does come, I don't know so much about Lulu, and I'm questioning this Peloton relationship, but I will eat some crow if I am wrong on this. Raj, what do you think about Lululemon? What do you think about this Canadian company as a fellow Canadian, which is not on a Canadian exchange, but still we wear the maple leaf.
Yeah.
What do you
Yeah,
think?
thanks for a good analysis, Sandeep. My thoughts are basically that it's very interesting to know this Canadian company does not quote on the Toronto Montreal Stock Exchange, but quotes on the US Stock Exchange. So that's very interesting. And the other interesting thing is that I do not find Canadian hedged Canadian depository receipt for Lululemon, whereas we have got for all the big American companies the Canadian deposit receipt, which is what I use to invest in US stocks. And it is hedged so that we don't lose on exchange. So that's very, very interesting. Another interesting part about Lululemon is that unlike our previous megastar companies like BlackBerry and others, I think Lulu has sustained for a long time, and so has Shopify. These are two companies, I think, which are doing very well. Otherwise, typically, Canadian companies which do well are bought over by American private equity and then dismantled. The biggest case is Hudson Bay Company, the oldest Canadian company. So someone bought it because it had so much of real estate property. They stripped it of all the property, made it a tenant, took the money, sold it off, and so these two companies are good. So apart from that, I mean, from a Canadian perspective, that's what I'm saying. But apart from that, I think there is a lot of risk in the market. I mean, this is my personal opinion, not financial advice. I'm going to do a separate editorial on this. I think the biggest risk that US has is the political risk, and the second biggest risk that it has got is about the potential of a recession. These are two risks, and you mentioned about recession. Because Lululemon will be a discretionary expense if it comes to recession, because people will eat bread, butter, and salt at the bare minimum, and they can go without a Lululemon, or they can use the same Lululemon for longer. So that's one aspect. The other problem I see is that with the current resistance to excusing student loans, the demographic that is going to buy Lululemon is heavily indebted, because most of those people have got student loans on them, and the salaries have not picked up as much as the productivity that has been delivered. And if you factor the 8% inflation from last year and a still high inflation this year, I think the student purchasing capacity is low. And that particular demographic also looks for life experience, like traveling abroad, going for vacations, going for clubbing and partying. At the same time, they want to stay in shape. So the question will be, when the push comes to shove, what is that generation going to do? Are they going to look at their own fitness, or are they going to go for life experience, like going to an exotic vacation or something like that? So that's a question. And another thing is, if you have another pandemic or something that comes in, things are bubbling in China. I don't know whether it is a real news or not, but if something does happen like that, so all the gyms are going to be closed. And I don't know how many would really want to splurge on a high-end Lululemon to exercise at home, in which case the Peloton that we are looking down upon might again become hot, and Lululemon might become a bit cold. So that's how I look at it. Now, I want to just take us back into I won't share the screen first. I want to share the screen here with the TradingView platform. And as you can see, Lululemon has broken through two really big resistances, which were all-time highs. And it's very precarious at this point of time, in my personal opinion. I'll explain to you why. If I was to go back here in history, and this is 16th of November 2021, the all-time high at that time was 478.71, with a brief spike which took it all the way to 486.19, and then it came down. Now what we are seeing here is, on Friday, this has just bulldozed through all those resistances and converted them into a support. And in the process, what has happened is that MACD is super bullish,
Wow.
And RSI is super overheated. It's overbought stock at this point of time with heavy volumes. And Sandeep, one of the distortions out here is the huge share buyback.
Yes.
Now, that huge share buyback, I want to show you some headlines that were there. Here, Investors Business Daily, 2 days ago, they came up with this article which says Lulu stock slides after Lululemon outlook misses forecast. Now, if you go back here to 2 days, so the stock went high before earnings and then it dropped. And then it has now gone up again on the back of share buyback. $1 billion worth of share buyback is definitely going to improve the valuation of the company. So that's what has happened here. But overall, I think the US is fraught with risk. And in my opinion, the political risk is getting very, very real. We have to keep those things in mind. That's what I would say.
Great point. Excuse me. I didn't think of that. That was a great insight. Thank you for.
I don't know. Just like you said, I might have to eat crow over this at a later point. But you know what? I'm a humble retail investor. I'm not a highly rated analyst or somebody who has to guard a reputation. In this channel, I just wanted to share my thoughts, my personal opinions, not financial advice. But I would look forward to our US audience to put their comments so that we can get educated. We are innocent Canadians.
Yes, yes.
North. What do we know about the US? We don't even know how to hold a gun or ride a horse or wear a hat.
Yes. What an example. But yes, American friendos, please tell us what's going on with Lulu where you reside. Are you seeing more of these stores pop up? Are you seeing more discounting? You seeing them busy? And I'm also interested, do you see Peloton busy? Because that's something which maybe we'll look at a different day. But Peloton, this is an interesting relationship. Lulu, is it busy?
But Sandeep, but it depends on what they are doing with Peloton.
Yes.
If Peloton wants to give Lululemon gear free along with their treadmills, right? So that's a positive for both Lululemon as well as Peloton, because that will help boost the Peloton sales. The other thing is if Lululemon is going to rely on Peloton to develop an app or use a Peloton app for something that they were not able to do, then I think that would be a bad idea.
From what I read, it's more so that the Lulu app, the Studio app, is being replaced by the Peloton app.
Oh, okay. So I think we'll have to do a little bit of study on what the Peloton app is, how popular it is, what are the functionalities, and what was in Lululemon's app, and whether it's a 1:1 fit, or is there some compromise, or it is better. That's what we'll have to see.
That'll be intriguing.
I don't know about that.
Do you want to see that, viewers in the audience?
Yes.
But do you want to see something else? Let us know.
So thanks a lot, Sandeep. And friends, please, I would like to hear from our American friends. What is happening in America? What's going to happen in 2024? Please size the risk, the political risk that I'm visualizing, and educate us by putting your comments below and letting us know what it looks like to you for 2024. Are you worried about your job? Are you worried about political stability? Are you worried about your ability to vote? All those things, because we do not know what's happening in there. We just read news items, and it has a very big bearing on our investment decisions, and we got to know things better. So I'm calling on our American audience to use the comment section and educate us.
Please.
Yeah, that's all, my friends. And with that, we'd like to bring this video to an end. Thanks and have a great day. Bye for now.
Thanks, friendos. Have a great day.